Good evening, all. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for the evening of Thursday. And this is the 7th of March, 2024, 5:40 p.m. Central Time. Well, 9 Eastern Time, President Biden will go on TV, have a huge audience, make his case, going to try to show that age is not anything wrong. He'll try to show America his point of view on where things are and make his best bid as he can to get a bump in the polls. Right now, when you look at the polls, it's a toss-up. I mean, within margin of error. So this thing's got a long way to go, and who knows where it's going. All right. Tomorrow, we get an important piece of data. We get the non-farm payroll. So the economists are forecasting 198,000 jobs compared to the 353 the month before. The jobless rate is expected to stay unchanged at 3.7, and the average hourly earnings, they're looking for them up 0.2% month over month. So that's where you're at with that. Obviously, today we saw that the market got a boost as soon as Ms. Lagarde was talking from the European Central Bank. The dollar went down, the euro went up on the news. A lot of analysts now looking for the 110 area in the euro. We cracked 103 to the downside in the dollar. That in turn gave gold the boost. Remember, the enemy of gold is what? High interest rates and a strong dollar. You've broken the dollar. Interest rates have backed off. They're back into the 4.1% area. And the talk is, of course, which bank's going to go first to lower rates? There's going to be a race here. Ms. Lagarde certainly made it sound as though if there are no surprises and the data stays as is, which is falling in inflation, that the door is wide open for possibly a June cut. Could be earlier, but that seems to be what it is. We know that in America, we keep looking at what our Fed's going to do. And if you listen to Mr. Powell today in front of Congress, it was the same game that he's been talking about. The U.S. is going to build a pier, I guess that's what you would call it, offshore. They have a way to do it. And then they float it inshore, and they'll be able to bring in truckloads, basically, off ships, where they'll be able to go. The trucks will go on the ships. The ships will bring over food and medical equipment for those in Gaza. And they claim that the U.S. will not have to put troops in Gaza. That'd be quite a feat, and it'd be quite an interesting thing to watch. The president, I'm sure, will talk about that tonight. Now, I don't mind telling you that I have missed this rally in the gold market, and I missed the rally in the stocks. I did great in the ETF trades, the individual stock picks. I missed this. And traders that can't say, hey, I missed something, shame on you. Nobody can catch every trade. I wasn't short. I didn't get caught on the way wrong. My work lagged it. That's all there is. Sometimes that can happen. So for the wise guys out there saying, oh, you didn't catch it, I agree. Not hiding behind it. In the gold market, you've had a heck of a spike. For the week, you're up 3.5%, another $71. This has been the liftoff. And you either were in the market or there was just no way to catch that market as it took off at the end of last week. It is now starting to roll to the right-hand side of a Bollinger Band. You'll see that in a minute. Remember when I told you, you might get what's called a kiss right here, where the 18-day average goes, skirts along the 100-day average. Sometimes it's the 200, and turned up, and the market just roared. Why did the market roar? Because the market is now enamored with the idea that interest rates are coming down, that we're through on the upside, they'll be coming down, and everybody now is saying, well, it's not just the U.S., it'll be other economies that do better. Therefore, it's become a market where inflation worries have disappeared and gold takes off in that scenario. Plus, it's got all the problems. I mean, there is that war with Russia going on. You saw that in Ukraine, the invite to Mr. Zelensky's wife, she turned it down. We haven't helped Ukraine. Not recently. As you can see how the market is to the right-hand side of the band, that's still very bullish. On the way up, you heard me saying, this is not bear action. Now, you've had 5 days in a row over the Bollinger Band. Go and count. It's very rare that you go that 6 or even 7 days. It can happen, but it's exceptionally rare. So I look for the market to bend over here. Doesn't mean it has to break. That's not what you're hearing me say. In fact, if anything, you could develop the embedded reading, which means until the red line closes under 79, the first break in the market's probably what the traders are looking for to see how to get long and see if they can kick this market up even more. When you look at the gold-silver ratio, I've now got it colored in silver as silver's been gaining a bit on gold. I've also gone April gold, May silver. So I've dropped the March silver now. We're into the May contract there. And as you could see, this is a market also riding the Bollinger Band, but it's not trying to embed the reading. It's just an overbought market. What was resistance, and it held that way for 3 days, is now should become support, the 200-day average, and right under it you have the 100 and then the 18. So it'll be hard for this market to revert to something real bearish. I think what you're looking at in the metals is pretty simple. Low interest rates eventually spur on economies. Those economies will want materials. Those materials go up in price. That's one way to look at it, and probably the right way. Copper up, even though if you looked at China stock indices, they weren't doing very good. The market's still questioning how China will get to their goals. On the other hand, copper's looking all over and doing just like this. Okay, if everything else is going because the dollar's down, interest rates are anticipated to be dropping this year in many of the major economic areas that have developed, I'm talking the big developed countries, watch out. Then you get more demand coming. And we've heard from the copper miners, they're cutting back on supply this year. So that all adds to the story. I still think the $4 level will be a bit of a problem for the market on this rally. And you're up to the first resistance point in the April Platinum, all the same story. At the upper Bollinger Band, the 100-day average, even if you scoot a little higher, I'd look for the market to have some resistance in this area. Resistance does not mean I'm bearish. It's resistance. In the dollar, look at how this market fought that battle that we talked about here between the 100-day, the 18, and now the market has capitulated to the downside. Okay, it's the first move underneath the Bollinger Band. If you have a move tomorrow that takes out today's low, closes lower on the day at the bottom of the range like you did today, then I'll call that a downside breakout. So looking to see if that happens. You put it together, you try to come up with a game plan, and we have them. You know, we put out an awful lot of information. It looks like this on our free offer page on our website. And by the way, you can just move your cursor to the top there to get to it. But it's at iraepstein.com. And you just click anything that you'd want in our different free offers that are all through here. You can hit pause and you can see what they are, in fact. And we get them to you by email. It takes a day or so, and we typically get them out pretty fast to you. And I think you'll find it fascinating. Remember, we're commodity people, writing about it all day long, putting out charts, different trade ideas, futures, spreads, options, all the different strategies you can think of. To see the information we provide to our clients, all you do is click that, put in your name and your information right here. We'll take it the rest of the way. I'm Ira Epstein. You have yourself a good evening. We'll see what the president has to say, and I'll see you in my other videos or first thing in the morning.